everyone, and welcome back to the course with everything you need to become profitable in the stock market. Now, if you are not a subscriber already, make sure you do press subscribe so you do get the weekly videos we're sending to you so you can become profitable even faster and learn how to trade and invest in the stock market. Now, in this video, this is absolutely a video you cannot miss because we are actually going to teach you a strategy. And I'm going to make a bold claim here. And that is, I'm going to teach you a strategy that you will beat the funds with. Not all the funds, because some are hedge funds and they have really good strategies. But most funds, they're not allowed to use more advanced strategies. And that's what I'm going to show you today. So you can take the power in your hands and really use this information to make wise decisions yourself. And the strategy I'm going to show you, it actually has those 5 components that I showed you before. And you know where to enter beforehand. You know where to exit beforehand. You know the trade management. You know how to exit with a stop, with a loss and a profit. And we're going to follow the golden rules as well. So it's very, very exciting. I hope you're excited as well. And before we get started here, make sure you comment below if there is a video that you would like us to record for you so we can help you on your trading and investing journey and really serve you. All right, so let's head over to the flip chart now. And I hope you're ready for this because I am really, really, really excited about this. Because this strategy is called the dollar cost averaging strategy. And yes, if you're a member of the clubs we have, the trading club, your trading club, or your crypto club, we actually show you a lot more advanced versions of this. But this is an intro. We need to create a strong foundation, and that's what we're doing now. And then we can build the pillars higher, and then do more advanced. But we need to get to the foundation first, if that makes sense. So let us have a look here. So how do we start this? So the interesting point here is with the funds, for example, the funds, they are not allowed to use whatever strategy they like. That's the reason we can make a lot more money than they can as well. And don't remember, they take fees. Oh wow, they take fees, right? So what we're going to do here is they're using the dollar cost averaging, and that's the kind of the common word for it, but we are going to call it the price cost averaging because maybe you don't use dollars, maybe you use pounds, maybe you use Swedish crowns for all I know. So they have imagine the whole year. You have January, you have February, you have March, you have April, you have May, you have June, you have July, you have August, you have September, etc., etc. And I'm just going to make lines like this because what the funds are doing, they are investing. Whenever you send them money, they are investing. I'm going to tell you a small story here because when Marcus started, he thought obviously that you send the money to the experts and they do everything for you. So what happened was that he sent the money and then he looked a year later because they're taking care of it. They sent the money every single month. And after a year, he was down 40, 50, 60% on his whole account. And he called them. He's like, what is going on here? Why am I minus so much? And the answer he got was, well, you're sending us money. We invest because that's what we need to do. And then you, Marcus, need to tell us when to sell. Can't you believe that? That's incredible. They are the experts, but you, who are giving them your money for them to invest, you need to tell them how to sell. Incredible, isn't it? But that's how it works. That's the rules. So that's why I propose to you and really press upon you to take this in your own hands and do it yourself. Because what do they do? So this is how the stock market moves, by the way. We need to just have some, I'm going to use a blue pen. Today the stock market is blue. And this could be anything. This could be Apple, Microsoft. This could be a stock. It could be an ETF like we have spoken about. But it goes like this, right? It goes up and down and up, right? That's how the stock market moves. And what the funds do, they invest a certain amount each month, whatever you send them. So let's say you send them 100, they invest 100. And then here they invest 100, and then the next month they invest 100, the next month, and this could be any time, right? This could be if you send the money on the 25th each month, there will be the 25th of January, 25th of February, 25th of March, 100, 100, 100, and 100, and then 100, 100, right? 100, 100, and then you have 100, right? And so on and so forth. Now, where would your price be? So comment below if you can guess that. Where would your average price be? Well, you have invested everywhere here. So your average price would be in the middle, right? Does that make sense? It will be in the middle. Now, that's good. It's better than just investing once, everything at one time. But so now we know this beforehand. Remember the rule. We know where to enter beforehand. And depending on if we're investing or we're trading, we might have a stop loss, maybe we don't. Remember, when we're trading, we always have a stop loss, but when investing, we don't. Because when we're investing, we want to invest over time. We want to build our positions over time. But what if we do this? I'm going to show you now. Are you ready? I hope you're ready. I really mean it. Are you ready? Because now I'm going to show you exactly how you can make more money than the professionals here. So, I know the question you're asking, by the way. The question you're asking me now is, well, why do I enter with the same amount of money when it's high, when it's low? That's crazy. So why don't we enter with 100 here, but then when it's higher, we enter just with 75. So if it's higher the next month, you enter with a little bit less. All right. Then if it's lower the next month, and we can have this line in the middle here. So you see, that's the average price. But now we enter with 75 because it's higher. But now it's down low, right? It's below the middle. So now you invest 100 and even more maybe. Maybe you invest 125. And then it's low again, 125. And you can see it actually becomes even. Right? So 100, but then 200, 200. So it becomes even, if that makes sense. So if you want to invest 100 a month, 100, and then 75 minus 125. Oh, sorry, you have the 25. If you add those 25 here, you then have 100 there as well. So it is 100. But then yes, then maybe you invest a little bit more here because it's down. But then when it goes up again, 75 and 75 and 75 again. So it will be quite even because the market moves up and down. So I hope that makes sense for you, that you don't have an average price in the middle because you have invested more when the price is lower. So what does that mean? And maybe you can guess that. So where would your average price be now? Would your average price be where it was before when we invested the same amount? No. The average price would actually be lower, which means that you would be up quite a bit more. If the price is here now, instead of being break even, you would now be plus maybe 10-15%. So in 5 minutes, I've now showed you how you can make more money than the professionals. But the last thing I want to show you in this video here is, and I hope you take a lot of notes here because you can actually start doing this right now. And yes, in the clubs, we have more advanced versions of this. But for now, I think that's good just to build your foundations. You can start here and then we'll build you up from there. But now the last thing I want to do is I'm going to go over to the computer here just to show you. So if we go to Apple, because you can say, well, how would I do this in real life? Okay. So I'm going to do the exact same lines here for you. I'm going to move out of the way in a moment. So I'm going to do this one. So here we have it. September, we have October, we have November, we have December, we have January, February, and March. Okay. Zoom in a bit. I hope this is clear for you. There we go. So here you can see, right, that this would be the same thing, but in real life. So you would invest 100, 100, 100, 100, 100, 100, 100 if you follow the rules of the dollar cost averaging strategy or the price cost averaging strategy that the funds use. But now with a bit more knowledge, maybe you would do 75 here because the price is really high. And then you do 125 because the price is a bit lower. And then you do another 125 because it is lower, right? And then you do 75, 75, it's higher again. Yeah, 75, and then down again, so 125. And you just keep doing that. And as it goes lower, you keep investing more. So in that way, on average, your price is lower, and over time, you will make a lot more money than if you put the same amount in each month. Okay, so I hope that makes sense. So I really hope this video made sense for you, and I really hope you got some value from it. And remember, now we know, for example, with this beforehand, exactly how much we enter with, and we are looking just to know exactly where to exit. We're looking for a 20% profit, and then we're going to get out to put the stop loss in. And regarding where we enter with a loss, we don't. We allocate the same amount of money each month. So we do have a strategy for entering until we're up 20% in profit. Because remember, over time, the stock market goes up in value. And then we just need a trade management, which is something we need to go into later. But that is how you manage to trade. So what do you do when you're up 10%? Well, maybe you put a stop loss at plus 5% so that you lock in those profits. But you need to know that beforehand. So, but we do put a stop loss in order to let our profits run, which is part of our golden rules. Okay, so once again, I really hope you enjoyed this video. I hope you got some value from it. Comment below. What do you think what was the one thing you learned from this video? And don't forget to like the video as well. And I'm looking forward to seeing you in the coming videos.